let's move on to the first part of our presentations, which is insurance planning. So what is insurance planning? Insurance planning is necessary for individuals, families, and also business owners to ensure that they have chosen the appropriate coverage for their futures. The purpose of insurance planning is to support or cover large financial burdens, to be an income protection by replacing our salary if we are unable to work, and it is a safeguard for ourselves, our loves, our homes, and our assets against unforeseen events. Firstly, life insurance. Life insurance helps to cover the essential expenses, pay your mortgage, pay your debt if you pass away. Examples companies that offer life insurance are American International Assurance Malaysia Berhad AIA, Zurich Life Insurance Malaysia Berhad, and Prudential Assurance Malaysia Berhad. Next is medical and health insurance help to pay for the cost of private medical treatment such as hospitalizations or healthcare services. Medical and health insurance will be provided by the listed companies such as American International Assurance Malaysia Berhad, Medical Insurance A+ Health, and Prudential Medical Insurance Protection Plan. However, the individuals must obtain motor insurance before operating their vehicles in public. This is because the motor insurance will help to cover the third-party property damage, personal injury, accidental or fire damage to the vehicles, and theft. The motor insurance can obtain from the certified companies such as AFIQAH General Takaful Berhad and Alliance General Insurance Company Malaysia Berhad. Lastly, travel insurance. Travel insurance is important when we are travel because travel insurance can help us to cover such as loss of passport, loss of travel deposit, trip cancellation, loss of baggage, and travel delay. The example companies that provide travel insurance are Alliance Travel Easy and AXA Affin Smart Traveller.
The importance of insurance planning. First, to give safety assurance from potential risks. Whenever we involve ourselves in the insurance policy, it will give a bit of the safety assurance for us whenever there's something unexpected happen in the future. For example, if someone took the health insurance and something happened involved with the medical helps, the insurance can cover such as the hospital bills and medical charge within the term and condition under the agreement of the insurance policy. Second, to maintain the standard of living for the family. By having the knowledge about the insurance planning, it can help to plan future not only for us but also to our own family that will continue living after our own death. It is stated like that because with the insurance that we paid, money can help to pay our debt or any settlement that should have been paid. Also, it can help them to manage everything that involved with the money before they can stabilize the expenses in the household. Lastly, to protect asset and property. It is one of the benefits from the insurance policy claimed by the customer, which is to protect asset and property such as a car insurance, property insurance, and others. In the future, if they face with the unforeseen situation that cause the damages, they guide the insurance to cover for the damages happen. That is why the insurance planning is very important because we never know and cannot predict what will happen to us in the future.
Assalamualaikum and hi. In this video presentation, I will explain about the current issues of insurance planning in Malaysia. Due to the pandemic COVID-19 over 3 years ago, these viruses are still affecting life, businesses, individuals, and industries worldwide. Based on Alliance Malaysia Berhad Chief Executive Officer, he said that the COVID-19 outbreak continues to weigh heavily on the economy and its repercussions on the insurance sector have not yet fully emerged. There are two current issues in insurance planning that I will explain. Firstly, is it true that the pandemic nudged people to buy life insurance? According to the Federation of Malaysian Manufacturers, 70% of respondents in an industry poll said they have reduced their workforce by 10% to 30% since the pandemic began. Despite the necessity of having life insurance as a vital protection plan, according to the Malaysian Life Insurance Association, 7.8 million working adults remain uninsured. As of 2021, the number of COVID-19 instances has risen and Malaysia's low life insurance penetration rate is adding to the government's burden of responsibility. One of the research that we found which determines individuals' tendency to buy insurance by giving data intended to serve as a nudge to influence insurance take-up among some of Malaysia's current workforce. Purchasing life insurance is a long-term commitment, and many working age people in Malaysia consider it as a serious financial decision. However, Malaysia's life insurance sector is expected to rise as much as 65.86 billion in 2025 according to a Global Data article. It also updates that Malaysia's insurance projection has been changed in the context of COVID-19 outbreak. Due to the economy slowly gaining its consciousness, the Malaysian life insurance sector is predicted to increase at a compounded annual growth rate of 5.38% between 2020 and 2025. Moreover, government announced in 2021 budget, it enables withdrawal of EPF, Employees Provident Fund, to buy life and critical illness cover, as well as the initiation of the Perlindungan Tenang voucher program that provides simple and affordable micro-insurance products to low-income communities that support demand for life insurance policies.
A statistical information on the percentage of people who are insured back in 2020 are found to be covered for only 22% of the population, while 36% of them believe that it is not needed, and the balance of 43% of the population cannot afford to buy themselves a personal health insurance. However, on the other side, the number of Malaysians that are insured by any form of insurance are recorded at 54%, as the penetration rate is 56.1% in 2020, as the rate reduces due to the diminishment of the two policies in the policyholders by 41%. However, as of 2021, there is an increase in performance and a major growth of 12.4% total premium in its new business, while the industry itself managed to gain a total of 12.8 billion ringgit in new business total premium from 11.4 billion ringgit in 2020, which further proves that people are starting to worry of the future and register themselves on life and health insurance amidst of the current COVID-19 pandemic situation.
Here comes to our second part of presentation, which is the retirement planning. What is retirement planning? Retirement planning is a financial preparation for a life without a regular income, as well as for someone who wants to live better and live well after they retire. The purpose of retirement planning are to encourage the individuals or workers with monthly wages to save some money for their retirement life, and as well as can decide the level of income needed during their retirement. There are four sources of funds for retirement planning. First one is provident and pension funds. It is a contributions collected by the institutions from the deducted percentage of employees' earnings, such as Employee Provident Fund (EPF) that deducted 11% from employees and also 30% of employees from their monthly wages, and as well as Social Security Organizations (SOCSO) that deducted from their monthly wages. Next, we have private retirement schemes that assist individuals for saving up their money at least 10% of their monthly salary to increase their saving. Next, we have Jabatan Perkhidmatan Awam (JPA) pension scheme, where the government employee will given the two options for their retirement planning, which are the Employee Provident Funds (EPF) and as well as pension scheme. Once they reach the age of 56 years, they will receive the benefits such as service pensions in monthly payments and the service gratuity in lump sum payment. And lastly, we have personal saving. Personal saving is an individual responsibility on where and when they want to start saving for their retirement life, such as start to saving their money in savings accounts, invest in stocks or bonds, and unit trusts.
The importance of the retirement planning first is to give the quality of life after the retirement. Upon the retirement, it is not only about the money that we have and the saving, but also the quality of our life after the retirement. Some people will consider taking the highest rate of the saving to make sure they have the sufficient money after the retirement. That is why it is very important to people to study and take any pension scheme they are considering to be fruitful for them in the future. It is because unexpected situation may occur in the future. So with the retirement money, it will ease a little burden that we may face later. Next, retirement money is under self-assurance rather than saving money in the saving account. It is better to save it under any of pension scheme. It is because the money is more secure from any fraud activity that usually happen. For example, the Macau scam, whereas the money transaction can be withdrawn even without the consent of the saving account holders. While in the pension scheme, you can only withdraw the money if you reach the obligation age to withdraw the money. Lastly, open an opportunity after the retirement. Usually, along the retirement, people will make a plan what will we do after the retirement. For example, open a cafe, homestay, or investing into a profitable thing. After the retirement, it gives people the chance to build their own business by using their retirement saving or their own saving. It's not only make them happy but also make the profit for them and keep the wealth for their legacy by building one business with their own brand.
Next, I will explain about the current issues of retirement planning. The Malaysian labour law stipulates a retirement age of 60 years. However, the issue occurs when the support offered by the government or private institutions or companies is insufficient to enable pensioners to confront their retirement days, which last from 60 till day. There are three current issues that I will explain. Firstly, low wages that lead to lower saving may affect retirement in the future. Based on Institute for Capital Market Research, Chairman Tan Sri Dr. Munir Majid statement, Malaysia has poor retirement coverage, insufficiency and sustainable development which have been compounded by the COVID-19 pandemic. Withdrawal from the Employees Provident Fund (EPF) have provided short-term comfort but have long-term negative consequences. Since before the pandemic also, Bank Negara Malaysia has stated that Malaysian workers' pay did not correspond to the value of goods they generate. In this case, how can pensioners have a comfortable life if they have a sufficient balance in their saving account? Secondly, medical costs including medicines, procedures, treatments and healthcare supplies have risen dramatically in recent years and are expected to keep enhancing. As a result, one of the problems of retirement planning is setting aside enough money to cover unexpected medical bills. This cost might be so high that they endanger your lifestyle, putting a burden on your children's finances if you need their help. The pressure of these unforeseen costs might make your retirement planning even more stressful. Lastly, about the inflation in retirement planning, which is a slow-moving disease that creeps up on you slowly until it reaches dangerously large dimensions. Many of our pensioners remark that they can't believe how much things cost now compared to when they were working. The rising prices of everything from homes to food to travel and self-care are putting a strain on retirement savings. This is true even if a person's life well within if not below their means. As inflation rises, so does the strain on the money, both now and in the future. Due to the inflation, retirement savings might get less than we expected.
The latest percentage of population by age group in 2021 stated that the older generation is currently the highest among the age group in compared to the year 2020. At the age of 60 years old, it is considered as the decent age of retirement as it suits Malaysian average life expectancy of 74.5 years. However, even though there is an increase in Malaysian elderly age group, more than 50% of them might not be financially ready for their retirement, as an individual needs to have a saving of 240,000 ringgit by the age 55 years old to cover for the basic needs and daily costs during the retiree days according to the Employees Provident Fund (EPF). Another statistic shows that the only way to ensure that an adequate amount of saving is saved for retirement, it is said to be best to save up at least 2,000 ringgit at the age of 18 and twice the amount of the saving for the next few years to reach the EPF target by 55 years old. Unfortunately, a staggering 47% of Malaysians aged 37 and above still have not started saving for retirement, which shows that most Malaysians did not have a retirement planning, is not financially ready to cater with the cost of living in the future.
In conclusion, we know that insurance is one way to save money for the future and for unexpected situations such as accidents, emergency surgical fees, fires, and so on. We also need no worries about our backup funds because with insurance, we can stay assured until the end. Besides that, we know that the average pensioner in retirement is between 55 years old to 60 years old. The higher the pension age, the greater the increase in life expectancy. So, with the help of retirement schemes such as EPF, we will have no worries about our daily expenses after retired, as our contributions of EPF is sufficient enough to support our daily lives. Last but not least, by having these two plans in our lives, it can help us be more relaxed if we face with the state's circumstances. Thank you.